Have you ever wondered about the financial performance of Pfizer, one of the world's leading pharmaceutical companies? Is it a good investment? Pfizer, a name synonymous with breakthroughs in healthcare, stands tall in the global pharmaceutical industry. As an industry titan, Pfizer has been instrumental in shaping the landscape of modern medicine, delivering innovative solutions to tackle some of the world's most pressing health challenges. Over the past few years, Pfizer's financial performance has been a topic of interest to many. There have been periods of substantial growth, marked by successful product launches and strategic acquisitions. Yet, there were also times of financial stagnation, as Pfizer navigated through patent expirations and competitive pressures. Key financial figures and trends tell us a story of resilience and adaptability. It's a narrative of a pharmaceutical giant that knows how to pivot, innovate, and capitalize on opportunities, even in the face of adversity. The financial performance of Pfizer has had its ups and downs. But what does this mean for potential investors? A good investment requires a deep dive into the financials. So, let's dissect Pfizer's financial performance. Key indicators of a company's financial health are revenue, net income, earnings per share, and return on investment. Let's start with revenue. Pfizer has seen consistent growth in revenue over the past 5 years. This steady climb is a testament to the company's ability to flourish in a competitive market, staying ahead of the curve with innovative products and strategies. Now, let's move to net income. Pfizer's net income has seen a similar trend of growth. This indicates the company's effectiveness in managing costs and generating profits, both key factors for a successful business. Next, we have earnings per share, or EPS. Pfizer's EPS has also been on an upward trajectory, which is a positive sign for potential investors. An increasing EPS often means the company is in a good position to distribute dividends to shareholders or reinvest in itself for further growth. Lastly, let's talk about return on investment, or ROI. This measure indicates how efficiently a company uses its capital to generate profits. Pfizer's ROI has been consistently high, outpacing many of its competitors in the pharmaceutical industry. Now, how do these figures compare with industry averages? Pfizer's revenue growth is on par with the industry average, while its net income growth outpaces the average. Its EPS and ROI are also above the industry average, indicating a strong financial performance overall. But numbers don't tell the whole story. It's important to consider other factors, such as the company's position in the market, its product pipeline, and its leadership team. Pfizer stands strong in all these areas, with a dominant market position, a promising product pipeline, and a seasoned leadership team. Looking at these numbers, Pfizer's financial performance has been robust, but is it a good investment? Investment decisions shouldn't be based solely on past performance. So, how does Pfizer stack up as a potential investment? First, let's talk about Pfizer's market position. Pfizer is one of the largest pharmaceutical companies in the world. A titan in the industry, they've successfully developed and produced a variety of drugs for a wide range of medical conditions. This broad reach in the market has allowed Pfizer to build a strong and diverse revenue base, providing a level of financial stability many companies envy. Next, a key factor to consider is Pfizer's product pipeline. The lifeblood of any pharmaceutical company is its ability to innovate and develop new drugs. Pfizer has a robust pipeline of drugs under development, with a focus on oncology, rare diseases, inflammation and immunology, and vaccines. This means that Pfizer is not just relying on its current drugs for future revenue, but is actively working to develop the next generation of medication. Strategic partnerships are another crucial aspect of Pfizer's investment potential. Pfizer has a history of forming beneficial partnerships with other companies to expand its product portfolio and reach new markets. These alliances not only strengthen Pfizer's position, but also open up new opportunities for growth. Finally, we need to look at Pfizer's future growth prospects. Pfizer has consistently demonstrated the ability to adapt and remain competitive. With its strong product pipeline, strategic partnerships, and a firm foothold in the market, Pfizer's prospects for future growth look promising. Now, how does Pfizer's valuation compare to other major pharmaceutical companies? Pfizer's valuation is competitive, and while it's not the cheapest option on the market, Many would argue that the stability and potential for growth that Pfizer offers justify the price. In conclusion, Pfizer has a strong market position and promising future prospects. However, it's not the only pharmaceutical company worth considering. There are other players in the market that, while smaller, offer exciting opportunities as well. So while Pfizer is a solid option, remember to diversify your portfolio and explore other opportunities in the pharmaceutical industry. While Pfizer is a strong player, there are other pharmaceutical companies that could be good investments. Companies such as Johnson & Johnson, Novartis, and Roche are also powerhouses in the industry. Each of these companies has a strong financial performance and compelling investment potential. Let's start with Johnson & Johnson. This company is known for its diverse product portfolio, which includes everything from baby shampoo to medical devices. This diversity helps mitigate risk and drive consistent growth. Next, we have Novartis. This Swiss giant is a leader in generic drugs, a market that's expected to grow in the coming years. Lastly, Roche. This company is a key player in the oncology segment, a sector that's projected to expand significantly due to increasing cancer rates worldwide. However, investing in these companies also carries risks, such as regulatory hurdles and patent expirations. Diversification is key in any investment strategy, and the pharmaceutical industry offers plenty of opportunities for that. So, is Pfizer a good investment? And what about other pharmaceutical companies? Let's quickly revisit what we've discussed today. Pfizer, one of the world's leading pharmaceutical companies, has shown impressive financial performance with robust revenues and stable growth. It's a testament to their innovative product portfolio and strategic business moves. The investment potential in Pfizer is significant. With a strong pipeline of drugs and a resilient business model, it's poised to offer potential returns to its shareholders. However, as with any investment, it isn't without risks. We also explored other pharmaceutical companies that are worth considering. Each comes with its own set of strengths and challenges, making the pharmaceutical industry an exciting and dynamic space for investors. So, the key takeaway: investing in Pfizer or any other pharmaceutical company requires careful analysis and consideration. Remember, every investment comes with risks and rewards. Make sure you're well informed and ready to make the best decision for your financial future.